Good morning, everyone. I am Ashwita Enamaneni. Today, I'll be presenting a business pitch focused on Volkswagen Group, one of the world's leading automotive manufacturers, and its strategic transition from internal combustion engine vehicles to electric mobility. Volkswagen generated 323.3 billion in revenue in year 2023, financial year 2023, achieving 15.5% year-on-year growth, which highlights the strength of its global sale and brand portfolio. However, despite this revenue growth, the company is facing margin and a capital efficiency pressure, with operating margins declining from 7.9% to 7% as a result of heavy investment in electrical vehicles and the software. This pitch does not focus on aggressive volume expansion. Instead, it examines how Volkswagen's current strategy is aimed at margins recovery, improving returns on capital, and restoring financial discipline during the electric transition. Throughout this presentation, I'll be briefly cover Volkswagen products and services, its markets and marketing strategy, the financial implications of the electric transition, and finally provide evidence-based reasons why Volkswagen remain an attractive long-term investment opportunity. Let's begin with a brief overview of the company and its current position. Going to explain about the executive summary. Volkswagen Group is in a process of strategic change on the way to electrified and software-enabled mobility. While the group had good growth in the revenue from financial year 2022 to 2023, the same has not translated to the level of proportional profitability. Volkswagen Group 2025 operating margins and capital efficiency has been decreased by the growing electrification software and the compliance costs. This business plan defines that structural financial reasons for this imbalance and proposes a concentrated approach designed to restore the margins and the capital productivity and calls for keeping Volkswagen's long-term electrification commitments. Coming to the next slide, products and services. Volkswagen has diversified product portfolio in different market segments. Mass market brands account for much of the group's sales volume, and the premium brand produce a disproportionate amount of the operating product. Electrification of the vehicles is an expanding segment of deliveries in line with strategic priorities. Volkswagen Annual Report 2023. However, there is high unit cost involved in electric vehicle production due to the batteries, software development, and also as a result of enforcing the rules. As a result, the existing product mix is supporting revenue growth but putting pressure on operating margins, especially from the price sensitive marks development segments. Coming to the next marketing plan. The car industry is a mature industry with little room for growth in the number of vehicles demanded, and the electric car industry is growing rapidly. However, the growth of electric vehicle is being accompanied more and more by aggressive prices, competition, especially in Europe and China. Volkswagen is a mass market premium and felt customer exposing it to the margin pressure in the pressure sensitive parts. In order to the safeguard profitability, market strategy should not focus on the price discounts but more on value technology, brand strength, and the total cost of ownership. The latter should be complemented by demand generation goals compared to the margin recovery aims. Going to explain about financial plan. Financial analysis shows based on financial year 2022 to 2023 audited data, there is a clear deviation of revenue increase and the profitability, which revenues had growth by 15.5%, operating margins declined because of the increasing electrification software and the compliances costs. The capital employed grew faster than the operating profits, which decreased the return on the capital employment and made people concerned about capital productivity. Liquidity is maintained by the crunch on the narrow buffer reduces the dependence on stable cash flows. These are some of the indications that confirm that Volkswagen's is financial changes is structural rather than demand related. Going to explain next slide. The proposed strategy focuses on the recovery of margins and capital efficiency instead of further increasing value. Platform consolidation eliminates duplication and supports fixed cost better. Tighter control over costs ensures that electric vehicle and software investments have financial returns that can be taken to the task. Product mix optimization: this focus less on low-end and more-end and high-margin electric vehicle offerings. This way, Volkswagen continues its path of electrification to profitability improvement while ensuring long-term financial year. Coming to top 3 evidence-based reasons to invest. First, Volkswagen is so big that even small efficiency gains represent huge profit upside. Second, the financial analysis reveals that the key value lever is margin recovery, thus making the investment case quantifiable and the realistic. Third, the proposed strategy is evidence-based, execution-oriented, and aligned with industry conditions combined with strong brands and global reach. These factors makes Volkswagen an attractive investment with definable challenges and a predictable path towards improving financial performances. In conclusion, this presentation has shown that Volkswagen Group's transition to electric mobility presents a profitability challenge rather than a demand or competitiveness issues. While margins and returns have faced short-term pressures, Volkswagen's 322 billion revenue base, global sale, and diversified brand portfolio provide strong operating leverage. The company's strategy focus on cost discipline, platform consolidation, improved electric vehicle and the software, cost management and optimization of the product mix toward higher margin segments positions it well for margins recovery and sustainable value creation as the electric vehicle transition matures. Overall, Volkswagen represents a compelling long-term investment opportunity supported by strong fundamentals and strategic discipline. Thank you for giving me this opportunity to present.